After 22 weeks of backtesting, this strictly mechanical GBPUSD strategy was sitting at exactly 49% profit. The rules were locked in, a rigid 1-to-2 risk-to-reward ratio, a maximum of 2 trades per day, and targeting specific liquidity sweeps. But as we cross into the month of June in week 23, the market volume begins to drop. The question for this phase of the experiment is simple: can a mechanical trading breakout system survive the slow, choppy summer months without the win rate completely collapsing? Let's look at the daily data for week 23. Monday opened with a perfect liquidity sweep. I executed the entry and secured a clean plus 2% profit. Tuesday tested the system immediately. The structure looked valid, but I took 2 consecutive 1% losses, hit my daily limit, and closed the day at a minus 2% loss. Because I walked away instead of revenge trading, my psychology was intact for Wednesday. The market realigned, and I hit a textbook 1-to-2 setup for a plus 2% profit. Thursday delivered the exact same high probability conditions. Another mechanical entry, another plus 2% profit added to the sheet. And finally, Friday. Instead of the usual end-of-week chop, GBPUSD offered one last clean sweep, handing me a final plus 2% profit. Week 23 officially closed at a massive plus 6% total. But week 24 is exactly why most traders fail their prop firm evaluations during the summer. The volume dried up, and the price action turned into pure chop. Monday dragged me into a quick minus 2% loss right out of the gate. I held my discipline, waited for the parameters on Tuesday, and executed a perfect setup to recover the balance with a plus 2% profit. Wednesday pushed the momentum forward. Another flawless 1-to-2 setup played out, giving me a plus 2% profit and pushing the week green. Thursday provided one more clear setup. I executed the entry and logged my third consecutive plus 2% profit for the week. But Friday was just a mess of fakeouts. The price action was pure chop, stopping me out for a final minus 2% loss. I took the red days, trusted the spreadsheet, and the week still managed to close out in the green at plus 2%. Which brings the experiment to a massive new milestone. Out of 120 total executions, this system has now generated 75 wins and 45 losses. That 62.5% win rate pushes the total account gain to exactly 57%. Here is the biggest insight from crossing the 120 trade mark. Surviving the chop in week 24 is infinitely more important than catching the surge in week 23. Because every win yields double the risk of a loss, your only job as a mechanical trader is to protect your capital on the red days so the math can eventually bail you out. But the summer months are just getting started, and the market conditions are shifting again. I am continuing this experiment to see exactly how much drawdown this system will take before September. Hit that subscribe button right now so you don't miss the upcoming weeks. And if you want to observe these live daily trades yourself, join my Telegram channel using the link in the description below.